Hello there, I'm Diabosito with your lunchtime market news. Hong Kong stocks jumped on their first day of trading in October. This as tech shares gained, fueled by upbeat sentiment over artificial intelligence, as well as JP Morgan's price target hike for Alibaba. This is while healthcare firms rose on Pfizer's tariff deal with the US. Hong Kong's Hang Seng gained 1.6%, while China's Shanghai index continues to be closed until the 8th. This is for the Golden Week holidays. And Japan's Nikkei climbs 0.9%. Out in the U.S., futures tied to the S&P 500 and the Nasdaq indexes rose early today, a day after weaker than expected private payrolls data bolstered hopes for interest rate cuts. This is while traders braced for a data-light session due to the U.S. government shutdown. Investors remain sensitive to any signal of policy easing, with rate cut optimism underpinning much of the recent rally that has taken equities to high valuations. The Dow Jones is down 0.3%, the S&P 500 is up at 0.16%, and the Nasdaq is also up 0.35%. Back home, the all-share index is up 0.6% at this hour. It's currently trading at 109,353. When we look at our currencies for this lunch hour, the rand is trading at 17 rands 18 cents to the US dollar. It's at 23 rands 16 to the pound sterling and at 20 rands 18 to the euro. Let's take a quick look at the commodities for this hour. Gold is trading at 3,882. It briefly touched 3,900 last night, and we'll be speaking to my guest, Muhammed Wagley, about that. And platinum is at $1,580 an ounce, while the price of Brent crude oil is at $64.91 a barrel. And as promised, my market broker for today is Muhammed Wagley. He's a portfolio manager at Sasfin Wealth. Muhammed, always great speaking to you. Before we even get to the other news, perhaps let's start with that oil price. I was just telling the viewers now that yesterday it jumped briefly to 3,900. Do we have any idea what could have caused that? And, well, of course, it has since retreated, as I've just read.
Well, look, Tibo, first and foremost, always a pleasure to be on the show. But the gold price is quite an interesting one. I think on one hand, we've got a couple of short-term drivers. And then on the other hand, we've got, some long-term drivers as well. So I'll just start with the short-term ones. I think you also touched on this a little bit earlier as well. But there's that growing expectation that the Federal Reserve is going to continue to cut rates. And then you combine that with the sort of uncertainty that we see pervading throughout the market, in relation to trade, in relation to tariffs, inflation concerns, what have you. And basically, we're seeing quite a bit of uncertainty. And, you combine that with the expectation of those, rate cuts. And I think, that's propping up the gold price. And, if I look at it, there's not really sort of too many catalysts for the downside, at least in the near term. Yeah. And then if I step back a little bit, we're seeing loads of central banks, I think predominantly the Chinese, but the UAE as well, but buying loads of gold. And that's part of this broader strategy to diversify away from the dollar, de-dollarification, if I may. And, those things together have really helped to prop up gold. Now we're sitting borderline at $3,900 an ounce. I was shocked really at 3,400. I'd probably say the same for 2,700. And now we're sitting at basically $3,900 an ounce. That being said, I don't really see this momentum, easing anytime soon. I think it's very conceivable that we'll be at $4,000 well before the end of the year.
Is that your prediction at Sasfin? You think? I was actually going to ask you that. You think that we could reach 4,000 by the end of the year?
Yeah, for the time being, we're quite positive. Again, there aren't really too many catalysts on the horizon to, change that view. I actually think that's a relatively safe view to have, believe it or not. Yeah,
let's talk about Prosus. They are just JSE-listed company, and the Nationale Pers Amsterdam, they listed subsidiary of Prosus. They've completed a Just Eat Takeaway.com tender with some strong support from Jet shareholders. Tell us about what this is about.
Well, so I think broadly speaking, just to give you a bit of context behind it, NASPA's process really wants to get exposure in the food delivery space, I suppose a bit more exposure in the food delivery space, and they want to tackle that sort of European geography. For a little bit more context, the CEO of Process currently, I think it's Fabrizio Bloisi, his background is in a very similar company, I think in LATAM called iFood, you know, so they do have the skills and the know-how within the space. And I've got to say that, you know, Naspers had actually been looking at Just Eat before Takeaway.com had acquired them back in 2020, but it seemed like they had lost out to Takeaway.com, and now they're actually getting the combined company Just Eat and Takeaway.com together for a price less than they were willing to pay 5 years ago. So from that perspective, the market really likes it. Looks like they've got quite an attractive deal. I'll also say that generally, you know, upon news of an acquisition, you don't really see the acquiring company perform well on the day, but that's not the case today. We've seen Naspers tick up ever so slightly. I presume that it is the same case with Process as well. But essentially, the company is looking to sort of beef up that European food delivery holding, and you know, in doing this deal, you know, that would position themselves as the fourth largest food delivery player, just behind I think it's Uber, DoorDash, and Meituan over in China. So brilliant deal, lots of exposure. Now let's see sort of how they synergize with some other sort of adjacent parts of the business.
Yeah, Muhammed, I just have like 1 minute with you, and I'm curious to hear your thoughts about those employment numbers, the private sector employment numbers in the US, especially amid the whole government shutdown. They came in just before, and a drop of 32,000 jobs or drops in payroll, not quite similar to what we saw earlier in the week with our QES as well. What are your thoughts, Ed Sasfin, with regards to this?
So I'll keep it short and sweet then. I think the main takeaway here is that we're seeing labor market softness, and that's really what you wanted to see, you know, just to sort of reinforce the notion that the Fed are going to stay on their path of easing this year, which is really what the market is pricing in. It's really what the market wants to see. I imagine the average American would want to see this as well. So from that perspective, you know, taking away the shutdown, it remains sort of the status quo that we are on that path for easing.
Muhammed, always great speaking to you. I've been chatting to Muhammed Wagley. He's a portfolio manager at Sasfin, and he has been dissecting the markets for us.